How much money are they going to have to set aside to deal with this, as well as to deal with Greensill, all told? Do you have a number yet?
Well, I mean, they've said close to 5 billion for the Archegos thing and the Greensill, a few billion things as well. I think the bigger issue though is that there might be more of these lying out there. So there might be more skeletons in the closet. And if this has been their approach to risk management, to simply take naked bets, insane naked bets with family offices and hedge funds of this sort, there must be others. If they approved this, they must have approved some other crazy things. And bear in mind, the markets have been really, really good over the course of the past year. In fact, it's been quite difficult to lose money in equities over the course of the past year. So the fact that in that environment, they're racking up these kinds of losses really makes you think, what happens if there's a small correction in the market? What happens if the market goes down 10, 15%? Where's Credit Suisse going to stand then? It's pretty scary, actually.
Octavio, how much reputational damage has there been? This is what I'm trying to quantify at the moment, because this is going to bleed out into every aspect of this company's operations.
Well, I think there's definitely a big reputational risk here involved in terms of them simply being very lax in terms of risk management. It's going to take a big, I think, an ongoing hit onto their stock price where investors are going to be a bit leery and say, not really sure what you're doing at Credit Suisse and what kind of exposures you have and how you've gone about doing your risk management. So I think this has a long-term effect. I mean, it's not going to really affect things like retail banking and corporate banking and stuff like that. But I think in sort of the prime brokerage business and the trading business, it might lead a lot of people to say, well, do we really want to deal with a company like that takes risks like that might not be terribly reliable as a counterparty? So there's a big knock-on effect, at least in the investment banking and trading side of things. On the retail banking and corporate banking side, I think they're pretty safe and will be okay.
Or securitizes the loans from Greensill to wealth management clients. I mean, maybe that makes them think twice. But heads rolled, they're going to fire a lot of people. What else do they need to do?
Well, I think they're going to have to go back. I mean, having the hedge rolls is one thing. So that's, of course, the obvious first step. But they're going to have to go back and look at their portfolio of prime brokerage clients, I think in particular, and maybe more broadly, see what the risk management group under the previous chief risk officer actually did, and go back and look at the big exposures and say, where are we at risk and what kind of other crazy risks did she sign off on? And so that's, I think, what they have to do now is go back into their portfolios and have a very, very close look and be very, very careful about any new clients they take on and any other new clients on the prime brokerage side. So that's going to be the task for them, I think, and that's going to take some time. To go back and look at this entire portfolio of loans is going to take a lot of work and effort to try and unravel and figure out what happened.
Octavio, they just weren't very good at this. They didn't move fast enough. Everybody else, even Deutsche, executed faster than they did. How did that happen? Is that just you don't have the skill set necessary to do this? You don't have enough visibility? And I appreciate that there's also an aspect of the risk management system here, but they just didn't move fast enough. Why not?
Well, I don't know exactly how this all unfolded, but I suppose the rumors that we've heard is that the large prime brokers got together and sort of agreed to unwind their positions carefully and slowly as not to impact the stock share price too much unless you go down. And it seems then that Goldman Sachs and Morgan Stanley sort of reneged on that promise and stepped to the front of the line and unfolded their positions really quickly. Now, I have some doubt that kind of meeting would really take place and prime brokers would get together and try and agree on things in that way. It looks a lot like market manipulation to me, and I think they'd be very, very careful about doing that. So I don't know if there's much credibility in those stories. No, I think the simple fact is that Credit Suisse simply had the biggest exposure of everyone. They were just more on the hook than anyone else. They had lent more money to this fund than anyone else, and that's what's got them, and that's why it's taken them more time to unwind the positions. They simply have far larger positions than any other prime broker. So they just took crazy risks. They took an insane level of risk and were left holding the bag now.
Well, and you mentioned that sort of if they did it with one guy, they're going to do it with other guys. So there must be more of these levered funds in there as well. What do you think happens to them right now? Does the bank go to them and say, okay, guys, we're cutting this. This is what we're doing. Do those funds go somewhere else? Or do we just see a level of risk reduction within the market?
Well, I think definitely Credit Suisse is going to have to go back to those clients and say, we're going to unwind these positions, and thank you very much for your business, but you might consider taking it someplace else. So we're not going to be able to extend that kind of credit to you. So I think that's what they're going to have to do. And I'm sure that there are others out there. This can't be a one-off incident. If this is what their approach was to managing risk and letting people like that become big prime brokerage clients, it must mean there's others. And like I said before, it's been a very favorable market environment for equities. Imagine what happens when things go a bit downhill. It's going to be bad.
Octavio, UBS, Credit Suisse, the Swiss government, the Swiss authorities take on an awful lot of risk having these two huge institutions domiciled in their jurisdiction, as a result of which they have insisted on the Swiss finish. They've insisted that from a regulatory requirement, these banks carry more capital. What do you think the Swiss regulators are going to do as a result of this? I can't believe that there isn't going to be a penalty associated with this. We're only still dealing with the fallout for US banks, and we kind of listen to what's happening with Wells Fargo, and there's still restrictions being applied to a number of institutions around the world. What restrictions do you think are going to be applied to Credit Suisse as a result of what has just happened?
Well, I think the Swiss regulators, the Swiss National Bank is going to go in and have a very close look at Credit Suisse and try and understand exactly what kind of risk they're taking, and understand also their methodologies. Like, how did you go through, what was the process for actually approving these things, and does that seem to be sound? Because it seems to have some very real problems there. So I think they will go in there, they will look at the portfolio that Credit Suisse is holding, they will look at their management, risk management processes, understand how do these things get approved, who signs off, what are the criteria, how do you evaluate this, and how did a guy like Bill Hwang become a client anyway? I mean, this guy was convicted for insider trading just a few years ago. He should have been massively on the blacklist, and the bank should have said, no, we're not going to touch this guy as a client. So I think there's a few questions around that. Sort of, first of all, what is your know your customer and customer onboarding risk management? And then also, how do you manage the exposures to clients, to individual clients like that? So the Swiss regulators are going to be asking those questions, and I'm sure there's going to be some fines. Now, the Swiss regulators have not been as aggressive in fining as maybe as the SEC or the FCA or people of that sort. But nevertheless, they're going to look at this and say, this merits a big slap on the wrist, and they're going to fine Credit Suisse something, which is kind of adding insult to injury for the shareholders. First of all, they lost close to $5 billion in this transaction, and then the regulators are going to probably hit them with a multi-$100 million franc fine on top of it. So I think that's what we can expect to see from the regulators in Switzerland.